lowest trading and borrowing costs. Our clients have the choice of investing globally or locally in stocks, options, futures, forex, bonds, and funds from a single integrated account. Our premier technology enables you to optimize speed and efficiency, perform sophisticated portfolio analysis, and manage your accounts. Start investing today at ibkr.com.
Hey, did you?
Yep, done.
And the...
Of course.
And...
Oh, yeah.
All in one...
Hour.
Behind the world's most productive people is the world's most comfortable chair, the incredible X-Chair, featuring patented dynamic variable lumbar support. X-Chair's adjustable seat depth keeps users small to tall, comfortable and supported. Available in breathable mesh, HDR foam, or top grain leather. Customize comfortable positions for your neck and arms. And X-Chair's patented SiFloat Infinite Recline provides the perfect recline for users of almost any size. This is not your grandfather's office chair. X-Chair supports workers everywhere who find themselves now working from home. Call or click to get $100 off the amazing X-Chair, featuring dynamic variable lumbar support. Plus, for a limited time, you can also get free same-day shipping. Create the world's most comfortable home office with X-Chair. We're donating 5% of profits to charities fighting COVID-19. Call or click to order today and receive a 30-day risk-free trial and $100 off.
To relieve financial anxiety and stress, focus on what you can control. Add up all of your resources, then prioritize your bills. Put housing, utilities, health insurance at the top of the list. Seek extra help if you need it to figure it all out. Many financial advisors and credit counselors are offering their services right now for free. And speak with a therapist. Medicare and many private insurers are now offering expanded coverage for telehealth services.
Let's get to CNBC headquarters. Jim Cramer joins us now. Santelli wants to buy a Tesla now. You had sort of you turned around and wanted to buy a Tesla, or you liked the company after you drove a Tesla.
Yes.
What do you think of what Elon Musk?
I like driving in it. My wife liked it. My daughter liked it. A friend of mine who is a former very big CFO said they could raise $2 billion in a heartbeat. Stock was at 270. Came in. I just said, you know what? That's it. I can't fight the tide. I think it's too good. My wife is a huge car person, just gigantic. And she said, this is it, Jim. I mean, if there was ever a stock you should recommend. And I finally decided, that's it. That's right. And I looked at the financials and I realized that they don't have to advertise. People love it. And I think that Elon is a genius. And I know that when you say that, people say, look, he's willing to put his workers in harm's way. I think that if you go in and inspect his plants, and if they're doing things that are in harm's way, change them. But I think this man's a genius. I think he makes great cars, and I think he should be able to do this car. And Secretary Mnuchin said the same thing yesterday. I hope it works out, but this guy's the best we have in terms of manufacturing. And I really am tired of hearing people on my Twitter feed say, don't you know what'll happen once he opens? He'll hurt people. Is there anything that makes me feel that'll hurt people? I think what he'll do is help bring back American manufacturing. He's the best we have.
All right, Jim. Hope that we will be watching at 9 for more on this and many other things. Buying, Fed buying some ETFs. Why not? Anyway, thanks, Jim. We'll see you in a couple of minutes. Coming up, more with Social Capital CEO Chamath Palihapitiya. Stay tuned. You're watching Squawk Box on CNBC.
Yes, the first word to any adventure. But when allergies and congestion strike, take Allegra D, a non-drowsy antihistamine plus a powerful decongestant. So you can always say yes to putting your true colors on display. Say yes to Allegra D.
At Amica, we believe in life's extraordinary experiences. We're an insurance company that delivers an experience that meets the only standards higher than ours. Yours. Experience Amica. Auto, home, and life insurance.
When we started our business, we were paying like an arm and a leg for the postage. I remember setting up ShipStation. I think it was just like 1 or 2 clicks. Everything was up and running. I was printing out labels and saving money.
ShipStation saves us so much time. It makes it really easy and seamless. Pick an order, print everything you need, slap the label onto the box, and it's ready to go.
Our cost for shipping, like, we're cut in half, just like that.
ShipStation, the #1 choice of online sellers. Go to shipstation.com/TV and get 2 months free.
On CNBC, the latest on relief programs, tax help, and state-by-state updates. Protect your business. Get advice. We're here to help with all-day coverage on air and on cnbc.com/smallbusiness.
At Tommy John, we believe you deserve the most comfortable underwear and breathable, supportive, lightweight stretch fabrics for the perfect fit on every guy. We believe in can't believe they never thought of that designs, like our stay put waistband and the horizontal quick draw fly. We believe the daily grind should only be in your coffee cup, not in your underwear. Plus, we guarantee no wedgies, no adjustment needed. Feeling is believing. So upgrade now and get 25% off site-wide at TommyJohn.com.
Malo is my French bulldog. He made my heart bigger when he came in my life. He never really liked his food. He wouldn't eat till like 10 o'clock at night. To me, it was saying, oh, I guess I don't want to starve. He was having skin breakouts, and putting the two and two together, what you put into your body is what you get out. I know that if I'm eating a bunch of processed food, I'm not going to feel good. So that kind of led me to Farmer's Dog. Immediately, his skin issues went away. I love what they're doing. It's already portioned out. He's eating whole foods. It's amazing.
See the benefits of fresh food at betterforthem.com.
All right, back with us, Chamath Palihapitiya, CEO of Social Capital and Virgin Galactic Chairman. Chamath, great to see you. Here's this is the direct quote from Buffett, because I don't know. This is the direct quote. The criticism towards buybacks is largely uncalled for. It's very politically correct to be against buybacks now. When the conditions are right, it's obvious to repurchase shares and shouldn't be the slightest taint to it any more than there is to dividends. That's what he actually said. And you do not agree with that, I don't think, and that's fine. And I understand exactly where you're coming from, although I do think, as a guy who loves risk capital, if a company is like some staid company that has too much cash, and I don't think Apple was staid necessarily, but if they give it back to shareholders who then go out and redeploy it into technology companies or somewhere else, I don't think it's necessarily should be viewed in a negative light. But you know what I really want to talk to you about? But you can talk about this, but I want to talk to you about whether we ever go watch the Warriors play again. And do you wish you had sold the Warriors before all this happened, or no, you're in it to win it, and we'll get through this? I mean, I'm sure that's the answer I want to hear. But we're going to get through this, right? And play some more hoops someday.
Let me say two things. But first, on the first one, I think, again, the key part of Warren's sentence is under the right conditions. And all I'm saying, Joe, is
I agree.
You don't send the money out the door before you take care of yourself and invest for your own future. That's all I'm saying.
I got it.
When that's possible, you should do it. And most of these CEOs have not. And I think that's ridiculous when they then go and ask for money.
Chamath, they got a leveling, it's bad, but from the last time we did this, we didn't want cash compensation. We want them to have a stake in the company, so they try to shrink the float, to raise the EPS, to get the stock price up to where some of their compensation kicks in, and I understand that. It's the unintended consequences of what we did last time. But I do understand. How about, am I going to be able to sit on the floor and it's going to be just me and you if I come out there?
I think this is a really important question we need to figure out. The reality is, in my opinion, there are certain experiences, going out to eat, going to concerts, going into large areas where you have basically anonymous interactions, essentially. So stadiums, casinos, I think, frankly, cruise ships. These are all the last things that can come online, because you're taking a level of risk where you have to underwrite your own comfort. And that's not something that we've ever had to do before. It's not as if when you got on an airplane, there was a 50-50 chance that something could happen. The reality is these were, 99.99999% safe. And so flying across the country was just a thing you did. But if going to see a concert all of a sudden was 50-50 or 60-40 or 70-30, for some people those risks will be okay, probably the younger you are. And the older you are, those risks shouldn't be okay, frankly. So I think that these are things that are going to be the longest things to figure out. And you're going to see some unfortunate byproducts of this. You may see college football stadiums empty for the next 2 years. Or you may see people separated, by 10 or 12 seats, what kind of an experience is that? I don't know. So I don't know the answer. I don't know what the NBA is planning to do specifically. But if you're asking me just as a person that manages risk, I wouldn't be super comfortable taking a huge risk going into, a casino floor or, going to a concert for the foreseeable future.
It is true, and it's not enough time with you. We had Paul Tudor Jones on yesterday, and he was talking about, QE infinity, however you want to look at it, and that maybe the time will come when you need to have some type of asset that there's a fixed amount of, and he was referring to Bitcoin. I think maybe even Paul Tudor Jones.
Say the words. Say the
Bitcoin.
words.
I have to disclose that I own. I mean, compared to you, I own like 3 cents out of $1 or something. You know what I mean? So, but I have to disclose that I own it. But Paul Tudor Jones made the case yesterday, and yesterday was the halvening. The halvening was yesterday. So the stock to flow has now gone up.
So, Joe, this is again now you're seeing a lot of lines of different thinking converge. So when we started to believe in the long-term value of Bitcoin, it was as a store of value, and it was that schmuck insurance that you kept under the mattress. And there was a small cohort of us that have believed this for like almost the last 10 years now. But when you have people like Paul Tudor Jones, sophisticated market participants, who don't necessarily come to it from that perspective because he was probably first in gold or curve steepeners or whatever. Now all of a sudden, even he is looking at Bitcoin, and the reason is because we are in this massive deflationary spiral, and you have to figure out how to protect yourself. And so, however you think about it, from a classic economic theory or the schmuck insurance, where you're somewhat skeptical of the established governing masses, it is important that we have a hedge, a non-correlated hedge. And I still struggle to find anything that is as uncorrelated to anything else and to everything else than Bitcoin. And I think that, if we see it have its day, it's a moment where you're going to wish that you had just bought the 1% and just kept it.
Yeah, one man's 1% is another man's. Anyway, it's been great having you on, Chamath, and we all. I don't know. I'm ready for Russian table tennis. I got some. There's one guy I got to tell you about. He's so good. You got to bet on him. No, but that's all. That's all we have. It's horrible. I can't wait for sports to come back. I just want to do it safely, and I know you probably feel the same way. Sorkin, thanks, Chamath. See ya. Sorkin and Becky, we're going to get your. I don't know what happened with your. It's hard though, isn't it, when the audio goes out? See, I don't even need audio a lot of times. It doesn't matter what other people say. I'm going to say what I'm going to say anyway, whether I hear what they're saying or not. Anyway, make sure you join us tomorrow. Squawk on the Street is next.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber, coming to you live from various locations. Futures are green as the Nasdaq's riding a 6-day win streak, the longest of the year. Big news day. Fauci's in front of the Senate in about an hour. The Fed begins buying corporate bond ETFs. 5 Fed speakers today. WTI up 5% as net long positions are now at the highest since April of last year. Jim, and of course, core CPI, biggest month-on-month drop in the history of the series, although there's some debate about just how important that is right now.
Well, I got to tell you, the bullishness is manifested by a huge part of the market. I call it the $11.5 trillion portion of the market, which is related to the Cramer COVID index, excuse the hubris. You can't get enough of these stocks, and we find them everywhere. These are the companies that do best when you stay at home, whether it be General Mills with a surprise pre-announcement that was extraordinary yesterday, or whether it be a lot of the Apple number bumps today, or even just, kind of, out of the woodwork, AbbVie put on the recommended list. Why? Because now you can stay at home but go get your Botox. There is just absolutely a level of bullishness about this stay-at-home, work-at-home market, and then there's the rest of the market, which is just awful and astonishing.
We're going to get to Calhoun's comments on the Today Show in a moment, but I know you have Logitech on tonight. Sales up 13, OpperNet up 23. I mean, there's a lot of webcams and mice and keyboards that are being bought right now.
Look, if you want Logitech, now they do have it's so interesting because some of it is gaming. They have a particular mouse that's almost as good as a wired mouse. Well, people want that. They don't want latency because they're playing video games at home. If you want to have a home office and get some great stuff, quality stuff off of Amazon, you can just quickly set one up yourself, and then you can Zoom. And, we look at these guests, and anyone who's a phoner, they just should go to Estee Lauder or something, or go to their dermatologist, because there's no reason not to do a Zoom Logitech interview. It'll cost you like $180. So, I mean, this is happening so fast that I think it's just incredible. I had an outfit called Upwork yesterday. All they do is they find people who would be working at home, and they'd be the right person for you. I see tremendous tall office buildings with nobody in it. David, you are seeing, with these real estate investment trusts, the exception of Simon Property, distress like you wouldn't believe. And it is yet to hit the banks.
Yeah, the future of work is something that we're going to be talking a lot more about. And it's funny because in talking to people on Wall Street, so to speak, the plan to get back to work, for example, goes to your very point. It's not just retail and Simon, which we'll get to, reporting numbers, and we'll get to that in a bit, but it's also all the office buildings. How many people are really going to be going back and talking to people about their plan for return in the financial services industry? Traders, for example, would probably be the first to be brought back, but they're going to bring back only a slice. Back. It may not be the same people, but they're going to be. That's kind of what I continue to. I don't know if it's what you do as well.
Oh, yeah. I mean, look, American Electric Power Zone last night, where they saw a dramatic decline in industrial use. Now, a lot of that is skyscrapers, office buildings, but a huge increase in residential. Now, a lot of that is the office at home. Now, this is one of the largest transmission companies in the country, and it is just happening so fast that it's even impacting electricity. Carl, I've got to tell you, if the choice between going and get yourself some COVID by going to the office and pressing the wrong button with too many people in the elevator and side to side and shoulder to shoulder with traders, or sitting at home, having a nice breakfast and then going to work, if you can silence the dog, no crying babies, you're in business.
Yeah, Jim. I mean, guys, some of the scenarios being laid out, especially in the UK, there's a story out this morning on Reuters about London. I mean, scenarios where bankers and traders don't go back to work for at least a year. And then, of course, there's corporate travel. David Calhoun of Boeing on the Today Show this morning talking about something that the sell side's been laying out there for about a month, and that is whether or not demand comes back in 3 to 5 years, and, of course, whether a major carrier ends up going out of business. Take a listen.
Do you think there might be a major U.S. carrier that just has to go out of business?
Yes, most likely. Something will happen when September comes around. Traffic levels will not be back to 100%. They won't even be back to 25. Maybe by the end of the year, we approach 50. So there will definitely be adjustments that have to be made on the part of the airlines.
Jim, Ben Baldanza on Squawk this morning said he thought a 50 number by year end was actually pretty optimistic.
Well, he's a bit of an iconoclast, so to speak. Look, I think that Secretary Mnuchin doesn't want that. I think the airline business is a very important business for our country. I do feel that when I look at a United Air flight yesterday and it's packed, I question exactly how poorly these do. I'm always surprised. Now, here's Mr. Calhoun. He gave a very critical New York Times interview of his company. And one of the things that I've learned in life, having been a salesperson and taught sales, you just don't tell the clients that they don't have enough money to do business with you. So what I'm going to call that, I'm putting that one in the ill-advised category. Just because he's the CEO of a major company, you can't say he was ill-advised. Stunning? David, stunning?
Maybe. Listen, maybe. The airlines.
Hey, David, one of the three of you guys are going to be out of business at year end. I don't know which one. Hey, could be any. No, come on. You're trying. These are customers buying billions of dollars of equipment. The one thing you don't do is say, "What I'm going under," because that's just not what you do in America.
I suppose Calhoun is a pretty straight shooter, I think, as we've learned, right? And seems to speak his mind, perhaps to your point. Great. Even when he shouldn't.
All CEOs are salespeople.
Yes, they should. Many of them are, and many of them are very good at that, and that is why they got to the jobs that they have, because they are good at selling. Jim, you're right.
Yeah.
You know, guys, when I think of Boeing, though, I still come back to the $25 billion that the company was able to raise in the corporate bond market. And that leads me to something else that's still extraordinary and going on every day, which is the level of capital markets activity is just off the charts.
Yes.
And it's not just debt. It's equity as well, although debt needs to be mentioned. I mean, Disney raising another $11 billion through sales of, what is it, from 5 years all the way up to 40, 3.8% notes due 2060. They raise $11 billion in total. Those were priced at a bit of a discount. You're talking about what could be $2 trillion in investment-grade debt raised this year by the time the year ends. It's just extraordinary. Companies willing to come back again when they've already hit the market once. And then, Jim, we've also got equity. We've talked a lot about it, but for companies that have had to issue equity. But then you got this huge secondary from PNC for BlackRock. I mean, those numbers are enormous. The banks are living off the capital markets activity right now because obviously M&A is very quiet.
Well, they better do it because every revolver has been turned. Everyone took the revolvers, and including companies that I wouldn't give 2 cents to. But by the way, also Federal Realty, which is a really good shopping center company, they just tapped the bond market at prices that, I mean, 10-year over, 310 over. I mean, people are willing to buy a lot of stuff. Now, maybe that has to do with the fact that the Fed is buying an ETF of bonds that are allegedly high quality. I mean, a lot of stuff is happening that is pretty extraordinary. But I cannot believe when are we going to see the banks on the hook for some real bad debt? We're going to talk about Simon Properties. But David Simon, he's amazing. I mean, he made this stunning thing in his conference call. It's like, I'm going to pay my dividend in cash. One after another of an analyst congratulating him that he's paying it in cash because so many REITs have stopped paying or cut their dividends in half. And in the meantime, a lot of them drew down their revolvers. And we don't really see the reserves yet. But the reserves better be up because, boy, the stocks are bad. The bank stocks are terrible.
Simon's going to open.
The bank stocks, yesterday were bad. Yeah, they had a bad day yesterday too, Carl.
Simon's going to open half of all of its properties in the next week. I know there's more activity, David, regarding Zillow Group today and Lyft on some converts. I read this morning we've already priced more this month so far than we did in all of May of last year. It's unbelievable.
Wow. Yeah, I mean, right. It's not just straight equity. It's not just debt the way Disney is. It's these converts, of course. We saw yesterday that deal with Cody where KKR stepping up for what will eventually be $1 billion in a convertible preferred. Carl, it is extraordinary. And again, if you are a company, you probably want to get out ahead of the issuance that's still to come and the idea that there will be a repricing of some kind that will make your cost of capital more expensive. That at least was what Disney seemed to be thinking, Jim, by their decision to hit the market. And again, at prices that are,
Buy S&P Global. Buy Doug Peterson's company. They rate everything. Holy cow, it's a windfall. Buy it right here. SPGI.
Guys, we'll take a break. There's so much to get to today. There actually is other news regarding Disney this morning. Bullard's on the tape talking about Fed programs. Fauci at the top of the hour. A lot more Squawk on the Street. Don't go anywhere.
I'm really proud of our people and everything we've accomplished since the acquisition. The performance of the business has continued to be really strong across the board on all value drivers for the acquisition, where we are executing well. The pipeline is progressing. The approvals of new medicines in the first quarter are really a demonstration of the strong focus we have on the pipeline.
Cheap.
That's BMY with Jim last night on Mad Money. Jim, there's a lot of other news today with LabCorp and Moderna.
Yeah, I mean, Moderna, they love press releases. They're fabulous at that. I mean, it's an amazing company. When you fast-track something from the FDA, all that means is that the illness is bad. Okay, so let's make that point. It's not like, hey, they just got some approval to do something fast. They just say, listen, this is a bad disease. Bristol Myers, Dr. Caforio, is a level-headed guy. He talked about how there are a lot of alliances among drug companies to solve, get a vaccine. But what he really is, it's just this cell gene deal is so unrecognized. David, the stock sells at 10 times earnings. It says it had 8% growth. That's the kind of thing people say, well, geez, the market's overvalued. Bristol Myers, I mean, this company is unbelievably cheap. So I know that it's really chic to be able to come on and say the whole thing's a big house of cards. But how do they explain the fact that there's a 3% yielder with a decent balance sheet that sells at 10 times earnings with 8% growth, and it's going to get faster? I just find the ignorance of people who want to slam this. They should look at individual stocks. There are stocks that are overvalued, but Bristol is not one of them.
No, but in some ways, hasn't the market noticed? I mean, granted, it is, in your opinion, cheap, but it is up 33% over the last year, Jim. I mean, I guess it hasn't been getting any respect for a long time.
That's it. And that's what I said to Dr. Caforio, which is that the respect was wanting in the 40 level. David, it was just me. And I know that that people just said, oh, he likes to say Bristol Myers. But then at $42, I mean, come on. He was using some gigantic number. The synergies are even better, $2.5 billion. This is the kind of stock that I implore people to put in their portfolio. And I find that there's many, many people who are so quick to say there's nothing to buy, but they don't want to look at individual stocks. They've made up their mind about the S&P, and there's probably about 2/3 of the S&P that is wrong. That just doesn't work. Where I've got $11.5 trillion with the Kramer COVID index that do work, so to speak, and make sense right here.
Yeah, but if you've bought the S&P index, Jim, you're not unhappy in the sense of you're only down 9% for the year, and you've benefited from those mega cap companies that we talk about all the time for obvious reason, Apple, Alphabet, Amazon, Microsoft, that have allowed that index to be where it is, despite the performance of so many other stocks, as you point out, that are far, far less.
But you are a glass half full guy. I think you don't understand it's a glass full. Okay, I mean, you think you're not unhappy, glass half full. No, you should be. It's happy. I mean, look at this $1 trillion index that I've got, David. It's okay. I mean, I know it's difficult to accept because of how horrible the situation is, but companies have pivoted dramatically. Carl, two price bumps Apple today. Why? Services. David, just be less glum. You're at home. It looks fabulous. My life stinks. You have a fabulous life. You probably even have the dog there. How's the dog?
He gets put away over in that side. Otherwise, he'd be all here doing things you don't want to. That aren't,
call center.
You know, yeah, yes.
Quiet dogs, David, for the win, for sure. We'll take a break here. A lot more to get to on this Tuesday morning. Stay with us.
the app.
Welcome back to Squawk on the Street. Time for a mad dash from this very happy household to your miserable one, Jim, as you said earlier. Sorry about that.
It's all right.
I'll do anything I can to
masochist.
improve your mood.
Well, I'll do anything other than open a factory in Alameda that I'm not supposed to. All right, here we go. Dave,
all right.
This is exactly what I'm talking about, half full. All right? Notice I'm not even using half empty. Alphabet this morning, Citi bumps its price target and takes it from 1,400 to 1,600. David, why do they do it? I don't know. They cut revenue growth. They're talking about revenue deceleration. They're talking about YouTube revenue growth decelerated, and they bumped the price target. David, this is what you're talking about. This is called, it doesn't say it. It doesn't say fatuous at the top, but I would have slugged it fatuous because you don't cut your revenue growth and then raise the price target. But, David, it's Alphabet. It's like Chinatown, right?
Right.
Chinatown. It's Chinatown.
Yeah.
Right?
It's Chinatown. It's Chinatown. Yep. Jake. That said, there are some investors, Jim, who are seizing on the efficiencies that Alphabet has been finally willing to seize as they cut costs as a real positive.
Well,
so revenues
really
maybe aren't going to go up, but margins will.
Yeah. Well, the drunken sailor thing kind of got a little bit weary, I did. It's you, David. Your turn.
Okay.
Dave, go out for that one, will you?
I think we're taking a break now, Jim. So we're going to do that, and then we're going to be back. We got an opening bell, by the way, 9 minutes away. A lot more for you on Squawk in the Street.
Tesla's up 2% pre-market as Elon Musk tweeted yesterday. Tesla is restarting production today against Alameda County rules. I will be on the line with everyone else. If anyone is arrested, I ask that it only be me. Plant was shut down for 5 weeks, Jim, and it sounds like you think he has maybe not legal standing, but moral standing to do what he's doing here.
Well, look, I think that he is a zealot. I think he is correct in thinking that the whole thrust of this country is to put people to work. Why do we presume that he can't do it in a fashion that's safe? I do not know. I mean, this is not Tyson, okay? This is not Smithfield. And why do we think this man necessarily is going to put people at risk? When I look at my Twitter column, there are two kinds of people. There are people who think that he's the greatest, and people who think that he's willing to sacrifice people on the altar of profit. Now, he may not be as concerned about COVID as every person in the world, but there's no indication that he's willing to sacrifice people's lives. Why can't they make a deal? I don't understand this. It's time to open up that factory, and I think he's dead right. I don't want to violate the law, but come on. This is... Do we not want this factory open? Secretary Mnuchin wants it open. I don't know. Do we have to presume
We talked about it with him. Yeah. No, we covered this with the secretary yesterday. In fact, here's what he told us.
I agree with Elon Musk. He's one of the biggest employers and manufacturers in California, and California should prioritize doing whatever they need to do to solve those health issues so that he can open quickly and safely, where they're going to find, as he's threatened, he's moving his production to a different state.
Jimmy does have the argument that they're essentially the only OEM now that is not allowed to open on a week where a lot of the other big three are going to open.
Well, it's great. I mean, we got rid of OSHA. Oh, OSHA still exists. I'm sorry. They would be valuable here. We don't have standards. There's a county unelected official that's shutting down maybe one of the most important factories in the country. I don't know. I mean, if the president were to get involved and say, look, I think that this is something we can all work out, that would be very valuable. But instead, we're focused, I don't know, maybe there'll be a tweet that says that we ought to get along instead of just trashing Comcast or whatever's being cat trashed. But this to me is right on the firing line of what's wrong with America. This incredible disparity. Everybody has even a county commissioner can shut down a great company. How is this possible? How is it possible that we have just unfettered the confederacy of anything? And I use the word confederacy not disparaging in terms of the things they did wrong, but the idea that everybody seems to be equal when it comes to being able to tell someone not to do something. And you were supposed to be trying to open up America, not close America. I don't get it at all. I just don't get it. Who is this guy to stand up in front of a real company?
Jim, all that being said, there is no unified approach here. We know that, right? It is each state making their own decisions down to the local level based on all of the different factors there. I mean, you've been the first person to speak out about protecting people's health every single day and how concerned you are about it.
So, trust and verify.
Do you know what the specific conditions are? I don't know. I mean, I'm not, and I can understand why you'd want to open the factory, but I'm surprised to hear you saying that.
Because it's not the Soviet Union in 1935. We're not like Stakhanovites. We're like putting a lot of coal into an engine. I think you can sit down with this man and work it out, is all I'm saying. Just what Secretary Mnuchin said. I think the disease is horrible, far worse than most people I think that I see commentary. But I do believe that there are ways. I mean, if we let Tyson open plants, okay? Tyson, we should let this plant open. Tyson was...
Well, there are ways to do it. Listen, again, I come back to Carrier and Dave Gitlin, who we spoke to on Friday, talking about their lines of production, having to space people out, using potentially robots in between. We know there's a great deal of robotics in any Tesla factory. In fact, probably more than there are people. I don't know what the spacing requirements are. We don't know all these things. I guess we'll find out. It would seem you should be able to figure out a way to get that thing open and make everybody happy.
That's all I'm saying, David. You and I, we have very little distance between us other than Washington, Connecticut, and right here.
Thanks for letting
All right, guys, opening bell
come
here.
on, it's big enough. No one will look for you.
As Brett fills in, Jim, in terms of markets, a lot's been talked about in terms of this rally being led not by valuations but by flows. And I just wonder, the historical setup when the NASDAQ is up 6 days in a row, 50 basis points a day, is not great.
No. Look, would I like it to cool off? Absolutely. I think that there is. Look, they forced a lot of money into the market. If we do get negative rates, that's also good for stocks. We have a lot of stocks that target boost of Alphabet really takes the cake, right? We're cutting our revenue growth, but we're raising our price target. And that's about being part of the flow. That people don't want to be left behind. There are companies that are doing well. Datadog was I know we're starting to really. That's not David's dog's name, but I do like it. Data, woof, David. There's a Datadog going there. Datadog was one of, other than ServiceNow, Datadog, they were one of 2 companies that actually put dramatic increase in forecast, okay? Most companies are suspended forecasts or they're not saying anything good. I've got 2 that would deserve to be up if we were playing by the old rules, Datadog and ServiceNow. And that is a little, that's just wrong. But we did go down a lot. And Apple is doing better, and I think Microsoft's doing better. I've got a lot of companies doing better. Facebook turned out to be better. Advertising didn't collapse among those. And then we've got all these other companies. Marriott, there was a cut there that was pretty significant. And anything travel and leisure is not really working. So I don't know. I mean, we just have 2 markets. And there's one market that is just horrendous. And the other market is getting all the money from the bad market. And it's happening now, and it's a little unnerving to see the board up again, and oil's up. I mean, come on. The retailers, really? Because they're opening up? Where do we see the monthly numbers? They're going to be terrible.
Well, yeah. I mean, the leaderboard is Simon Property at the top, and then Nordstrom, L Brands, Gap, and CarMax. So we're clearly playing a retail reopening dynamic this morning.
Yeah, at least CarMax, they had some good things. CarMax is that upgrade was very interesting because it talked about how people will be afraid to take public transportation, so they'll buy a used car. I thought that was good. Nordstrom is just a belief that they're not going to go under. That's not a really great reason to buy a stock. Gap is very similar. It's like, wow, you know what? I got to buy that stock because it may not go under. But there are a lot of companies that I just think are momentum. I mean, we've got Cisco reports tomorrow, and that's been momentum from 38 to 43. But maybe they've got that division that competes directly with Zoom, and it's doing well. WebEx, and maybe that's enough to propel the whole company. We had this company, a company that a lot of people really like. It's a company that does fiber optics that people really don't focus on. 2.6, that's IIVI, and they had a blowout quarter. So people are buying fiber optics companies, including Cisco. So there are a lot of companies that are doing well in this stay-at-home world. I can't help it. The General Mills quarter, the General Mills CEO was on. He cannot contain himself because people are baking and people are cooking and they're feeding the dog multiple times. Then they're baking some more. They're eating cereal. I mean, holy cow, they're doing things that they used to go to work and be miserable. Now they're like at home having a good time cooking. And so I think that there's stay-at-home has some real advantages, and also you can see the skylines. How about wild animals? I saw a fox. Whatever.
Yeah? Did it have a lot of fur on it? I've noticed the foxes have a lot of fur this time. Do they always have a lot of fur? I don't know. Do they ever shed? I don't,
I'm not really familiar with their MO, frankly. Any coyotes up there, dude?
Yeah, there are.
Yeah?
That's why my dog,
you have
named
a gun?
Scoop, has to be careful at night. I do not. No.
You ever hunt?
Do you?
You ever hunted?
No hunting. No. Yes, actually, once hunted
Never
some
mind.
pheasant.
Just up there. I mean, now you
ago.
got wildlife everywhere. You got bald eagles. I mean, everything's coming back. It's amazing that wildlife is. Carl, it's like real. It's like National Geographic. It's incredible what's back.
Nature finds a way.
I mean,
nature finds
air
a way.
pollution, you name it, Jim. By the way, speaking of air pollution and carbon, the president tweets just now, guys. Crude oil prices going up as Saudi Arabia cuts production levels. Our great energy companies with millions of jobs are starting to look very good again. At the same time, gas prices at record lows, like a big tax cut, the best of all worlds, transition to greatness. There is some discussion, Jim, that even if you don't believe the squeeze in equities, oil is telling you that there is a rebound in global activity happening.
Yeah, well, that minus $37 was a pretty scary day. And the way that happened was it happened so quickly that most of the actual big oil companies are not nimble enough. They couldn't be down there. Believe they want to. I mean, Chevron would have loved to have been down there. It just happened too quickly. There is some demand. There's some airline demand. There's, but I would point out that that most oil companies cannot break even at these prices. And it is great to not lose those jobs, but we are nowhere near the break-even level. We have to go up, let's go up another $5 before more than 6 companies can make money. Imagine that. There's 70 that lose money right here. So, I mean, yes, it's great right now that they're able to get some revolvers and do okay. But remember, this can't last. It's got to go to 32. That's where you start getting a lot of break-evens. 32. 32.
It's a ways from here.
Yeah.
Carl, you mentioned Simon Property being, one of the leaders in terms of at least performance this morning. The stock up 6%. We mentioned it a couple of times at the top, but it's worth just quickly going over it. They talk about the fact that they have reopened 77 of their U.S. retail properties and reporting numbers, of course. David Simon, the company's chairman and CEO, as well, talking about the unprecedented challenges they're facing right now and the disruption to the business, of course, how quickly they had to pivot to address the spread of the virus and temporarily close so many of their U.S. properties. What he didn't discuss at all was the Taubman deal, and that's why shares of Taubman, TCO, are down this morning because, once again, he did not handhold in any way, shape, or form did Mr. Simon. It's a deal they entered into in the early part of February. I think it was February 10th. I mean, if they'd only waited a couple of more weeks, it might have been a very different tale. And there are those who are looking at the 10Q, and you might not make much of this if you were just sort of passing through the 10Q. But the fact that within the 10Q, they talk about it in a different way. They say that it's contractual. Under the terms of the merger agreement, the contractual purchase price for all of Taubman's common stock is $52.50 per share in cash, or $3.6 billion. The use of that word contractual, Jim, seems to be freaking some people out. It's sort of saying, well, this is the contractual price.
Yeah, he doesn't want to talk about this thing. I love the guy. He's like one of the meanest persons ever. That's why I really love him, I think.
He is tough, man.
He's tough.
I know.
He looked at me and he goes, hey, you, $33 billion. I said, what? No, Jim Cramer goes, no, you, $33 billion. I paid $33 billion in dividends. I said, well, that's fabulous. I'm Jim Cramer. And I said, $33 billion. He's a tough guy. I don't want to be on the wrong side of him, David.
So
he's brilliant. He's a nice man.
Do we think this is a guy who's going to, no matter what he's got to do, is going to figure out a way to try to get out of this deal, or at least delay it as much as he can and get a price cut?
I don't know. He's also an incredibly honest, good businessman. I mean, that would not be in his nature. I mean, no one's ever thought that he's anything other than the most honest, forthcoming. I mean, I don't know how to get out of this, David.
I know, but man, the timing was just about as bad as it could possibly be.
Well, we bought a house March 22nd, so I don't know. What bad timing? I don't know.
No kidding. Another house?
Yeah.
Wow.
Yeah, maybe we should go to Rick.
All right.
Yeah.
All right, we can do that.
Jim.
We can do that.
Maybe we can cover that another time. Let's get to Rick Santelli on what is a very busy morning for his beat. Morning, Rick.
Yeah, no, I was enjoying this. I didn't really buy anything big in March, but I want to hear more. If we look at CPI, there was more. CPI, the headline number goes back to 1947. But core, the concept of core came 10 years later, 1957. And down 0.4 today on core. Think about it, ex-food and energy. You would think energy was it. Ex-food and energy down 0.4. We never had a core number that small since 1957. So it really is enlightening. Treasuries didn't pay a whole lot of attention. Well, maybe because the Treasury keeps buying so many, although they're buying less and less. If you look at a chart for 2 weeks, you can see there is an upward trajectory to 10-year note yields as we've gone from kind of the 50s, 60s to the 60s, 70s. but it's very tame. Curve is basically around 50, 51 basis points, 10 to 2s, kind of idling right there. Now, if we look at a 1 month of 10s, we have closed basically 1 month highs yesterday, first time around 71 basis points. You can clearly see it is rising. And what we really want to see at some point is a test of 1%, 1.25%, somewhere in that area, kind of where it really started to get messy when rates started to come down, if you recall. Now, we all know that the Federal Reserve has made a play to come in and buy high-yield ETFs. Is it a good idea? Many don't think so, but they're doing it nonetheless. Now, if you look at a chart going back to the very beginning of the HYG, it started in April of 2007. You can see the whole run there. And obviously in 2009, that was the big break where it was at its worst level outside of March, where it's coming back and it's now idling, kind of waiting for the Fed. It's come well off its lows because it knows that the Fed is coming with some dollars to purchase that ETF. And it's going to be very interesting because they haven't purchased anything as of this point in time. Finally, the dollar index. Now, this chart goes back to mid-March. What's interesting is this is the 9th week in a row we've had at least one session close at 100 or higher. They've already had it early in the week. It slipped a bit. It's down about 0.5 cent. But that really underscores how strong the dollar index is. And ultimately, it explains one reason why our inflation numbers are where they're at. Because as things come in, that strong dollar actually buys us lots of things compared to other countries. Carl, Jim, David, back to you.
All right, Rick, thank you for that. We'll talk to you in a little while. We were just talking Tesla, Jim, and the president now tweets California should let Tesla and Elon Musk open the plant. Now it can be done fast and safely.
Yeah, look, I think that the key thing is the people against Musk presume that he runs some sort of sweatshop. They presume that he runs some sort of Tyson plant, the old Tyson, before Tyson got religion. And I just think, look, trust and verify, open it, make sure that it's run safely, and let's go put these people to work. I don't know where it came about that once the plant starts, you're not allowed to look into it. The president's right. There.
Well, we're going to see, maybe Fauci will be asked about this in a few minutes. Fauci will talk to Senate Health Committee this morning at 10 a.m., as well as the heads of the CDC, HHS, and the FDA. He's going to do it remotely, Jim, as they do a bit of semi-quarantining because of some of the exposure that's been in the White House last week or two.
Well, I'm glad he's doing that. It was very unnerving to see the West Wing have people who were infected. I mean, look, we all know that it's very interesting, the open Shanghai Disney, right? So what do? They only have 1 meter social distancing, but everybody has to wear masks. We're into the 6 feet social distancing, but the masks are kind of optional. And the optional thing is starting to really lose a lot of, I think, gravitas. I think when you go to Costco and you got to wear the mask, every store that I went to in Long Island this weekend, you had to wear a mask. I mean, look, we know that they're not perfect. By the way, Mark Benioff has a great tweet today that talks about how they're only this good, and then they cut them down this good, but it's still better than nothing. And I do think that the Chinese understand that. I think it's interesting that their social distancing is not nearly as significant to them as it is in this country. And why is that? Because we don't know anything. Not we, them or us. I think there is a belief that somehow the novel coronavirus has been figured out by our scientists, and that is just simply untrue.
Jim, there is a lot to back that up, it would seem, given every day we learn something new. And the medical professionals on the front lines obviously are trying to respond as quickly as they can to all the different inputs they're getting. Guys, want to mix it up a little bit here, bring on a guest that, Jim, you've had on many times as well, a company you follow closely, International Flavors and Fragrances, the company having reported numbers. It will begin its conference call soon as well. But we've got Andreas Fibig, the company's chairman and CEO, first on CNBC with us this morning. Andreas, nice to have you with us. And I want to get right to the quarter itself and what you saw, because you saw positives, of course, as a result of significant demand for ingredients and solutions, for example, in certain consumer products, packaged food, and the like. And then you also saw fragrances and cosmetics, I would assume, sales of which declined, given nobody could go into a department store, for example. So what are you doing at IFF to adjust to this new reality?
Yeah, first of all, thank you. Good morning. Thank you for having me here. We had a good quarter. And that was driven by certain categories and certainly by the ability of IFF to basically work with the supply chain. All of our 110 manufacturing factories are open. And that was a bit of a challenge, but I come to that later. What is really thriving right now is on the flavor side and ingredient side, the center of the aisle in the supermarkets, everything which is packaged foods, which goes in there. We see it also on hand sanitizers and detergents, which are really, really going extremely well. And that's driven by the demand we see in the marketplace, but also by some of the big wins we had end of last year. As you were saying, what is not going very well is in particular fine fragrances or cosmetics, or some of the food service products as well. But in general, I would say strong quarter and a good start into the year.
Yeah, given that, Andreas, why not share 2020 full year guidance?
Look, we believe that, or we see that the market is super volatile at the moment right now. And we see spikes in some categories. It goes up by 200, 300%, and others are going down. We said it's just too volatile right now, and we don't know how the recovery will happen when all the different countries are opening up again to keep the guidance. But we will give, over the course of the second quarter, more guidance on the second quarter when we can do so. And I think it's the right thing to do for that situation. The good thing is it's a global business. We are selling our products in more than 200 different markets. And the whole COVID-19 crisis, as you well know, started in China. So we took a lot of learnings from our Chinese operations. Then it went to Europe, then finally to the US and Latin America. And that helped us to adjust. What is a big question for us right now in our consumer insight studies, what will be sustainable of these trends? So will be, let's say, all the health, the vitamins in food be a sustainable trend? Are we seeing that the people using more hand sanitizers going forward and wash as much as they do right now? That's underway. We do every year around about 500,000 consumer interviews. We really want to figure out what is important for our customers to be successful in the future.
Yeah, and we talk a great deal about what the new normal is going to look like, Andreas. What about your own workers? I know most of them are reporting to your facilities and have been throughout this. What changes have you made? What changes do you anticipate making as well in terms of how the work is getting done?
First of all, I'm extremely proud that all of our essential workers are showing up every single day in our factories and working. We have done a lot to help them to stay safe. We have split the shifts. The shifts don't touch or see each other even. We have the face mask in there. We do, before they leave their homes, they do their own temperature measure. They have SOPs they are following. And that's the reason why all of our 110 factories are open and working. Even most of our labs are working with different shifts as well. The only are the office workers, which are in many countries are still home. And now gradually we are restarting the office as well. But as we find being now on Zoom here, it works very fine with people working from home as well. What we have done also is to help the frontline healthcare workers, the police departments, with some hand sanitizers. We have up to now produced more than 70 metric tons in hand sanitizers and have developed a special scent. We call it Hope 2020, which we distribute for free to all of these workers in right now 8 countries and more to come.
Andreas, it's Jim. It's great to see you, and congratulations on an amazing quarter.
Thank you, Jim.
I don't know if people understand how much of your business is the business that's really sidelined. We don't care how we smell on Zoom. So obviously you pivoted. I've always felt that was so great about your model, right? I mean, you could pivot.
We have to figure this out. And then certainly the merger with the DuPont and Embiid business is on track as well. You know, we announced it last December. We are very proud that we have announced yesterday the top leadership team, the purpose and vision of the new company. And even despite the COVID-19 situation, we are not missing a beat in combining these two companies together.
Yeah, but I love the nutrition part. I mean, I love the way you broke things down. Again, it's a great mosaic because it's a couple $1 billion product lines that are all growth mode, and I know Ed Breen's excited about it. Something you taught me early on was that we like the taste of the first thing we tasted when we were born. We are in a very insecure time, and people are at home. We want to be comfortable in any way we can. Are you seeing a resurgence of the basic taste that we got when we were born?
Yes. Maybe not when you were born, what you experienced in your childhood. Yes. Macaroni cheese in this country, for example, and other tastes all over the place. I think that's the reason why people are now going back to some of the big brands they know for years and for decades.
Andreas, finally, you mentioned the DuPont deal, of course, on track, as you've said, to close in the early part of 2021. Your stock got whacked after you announced that deal. It has come back since, in part on the strength of the results themselves. But what did the market not appreciate, understand, or not like about that deal that it seems to have come around to appreciating now?
I think there are a couple of things. The first, we had to understand what is the strategic logic behind the deal. Secondly, we had to discuss the financing, how we really want to make it happen. And we acquired 2 years ago another company called Frutarom, and we had to explain that we basically will finish the integration of Frutarom until the third and fourth quarter this year, and then basically go first quarter next year into the next big integration exercise. And I have to say, looking at the first quarter of both companies, whether it's DuPont N&B or ours, it shows there are two essential businesses which will be combined here, and we're pruned to growth going forward, even in that environment. On top of it, we are now in the position to really do integrated solutions where we can bring a lot of these ingredients together. Let me give you an example. We see right now a lot of plant-based burgers, plant-based meat, even with the meat crisis in the US, there's a lot of demand. Now, as a company, we are not just flavoring that. We can do the plant-based protein, which we get. We can bring the texturizers into it. We basically can do almost the whole product here for our customers. And I think this is a very strategic advantage we are having against all of our competitors.
Well, Andreas, we always appreciate your updating us on those various efforts. Thank you for joining us this morning.
Thank you. Take care. Stay healthy.
You too.
All right, guys, Dow did get a pop at the open, up 160, but now settling back to the flat line along with the S&P as Dr. Fauci's getting ready to testify in front of the Senate in just a few moments. Don't go away.